Despite the recent slump on the market, it's not been all doom and gloom for equity investors. Returns for the year are likely to be positive, albeit much lower than previous years. The last 2 years have seen the JSE yielding outstanding annual returns of well over 20%. But many traders see inflation-linked returns this year, despite the all-share index reaching its all-time high of 52,242 points in July.
It was a little volatile and a little scary at times, to be quite honest with you. We were at one stage a few months ago doing really, really well for the year, followed by a 12.3% correction, which I think raised the hair on many people's backs, including my own, to be quite honest.
The first half was a lot easier to trade as a trader and allocate capital, but the second part of the year was definitely where you allocated your assets, what sectors you allocated your assets to, determined how much performance you would make from your portfolio, because it's been quite a muted year.
The performance of the JSE over the past few years has confounded many analysts, as it was contrary to weak global and domestic economic conditions. It was a similar story this year, with the domestic market ignoring issues that were deemed negative for investor sentiment. This includes stories of electricity supply shortages and a sharp slowdown in growth.
We've had this disconnect between equity markets and the underlying economy, and the reason for that is a large proportion of the companies listed on the JSE derive their earnings from outside of our borders. So it's not a South African story. If you look at our equity market, a large component of dual-listed stocks, it's a global story rather than a South African story, and that's largely been behind some of the disconnect. And then also on top of that, easy monetary policy globally finds its way into financial assets, and that's why you've got the index sitting at these fairly elevated levels, despite the fact that the economy has disappointed quite materially.
But does the slow growth in the JSE this year signal a turning point for the market that has defied all logic over the years?
We've had a bull market that's been running now since sort of late 2009, and a lot of people are starting to ask whether or not this momentum is running out and we could be moving into the next bear phase of the market. Whether or not that will play out, only time will tell.
On the new listing front, the JSE has had a good year. The local bourse has almost doubled the 9 listings it registered last year.
5 of those have been on Altex, the rest have been on the main board. Across, I think, a good range of industries. There's been continued interest in property, real estate investment trusts. We've had some listings in resources. So it's been a good cross-section. And of course, in addition to the new listings we've had listings of other products such as exchange-traded products. We've had 6 of those. We have had 212 warrants issued. We've had numerous debt listings. And of course, some of our listed companies have come back to the market to raise additional capital. So I think this has been a better year in terms of capital markets activity certainly than we saw in 2013.
And for the ordinary man on the street looking for a slice of the JSE action, exchange-traded funds or ETFs may be a way to go. These often require a minimum lump sum of about 1,000 rand or a monthly debit order for about 300 rand. Alternatively, stockbrokers are also available to hold the hand of novice investors.
The minimums, it depends where you go, but on average it's about 10,000 rand. Not many brokers like to deal with clients that small because it's very time consuming and you don't really make let's say a good return on a client with 10,000 rand, but you can come to the stock market with 10,000 rand, build it up and allocate capital. Let's say every 6 months you can put in an extra 5,000.
And when it comes to stock picks for 2015, many traders say investors will do well to avoid resources companies until the demand for commodities picks up again in China. Industrials and financials are considered a safe bet, as many expect more of the same in terms of economic and market fundamentals into the new year. Luta Motlogelwa, SABC News, Johannesburg.